Let's break it down. One of Warren Buffett's closest lieutenants is leaving Berkshire Hathaway to join JPMorgan, right as Berkshire is getting ready for life after Buffett. Todd Combs, the man who ran Geico and helped manage Berkshire's massive stock portfolio, is moving to Wall Street's biggest bank. I'm Imran, a Middle East-based analyst who follows markets, big banks, and global economics. In about 3 minutes, let's walk through what's happening and why it matters. And before we dive in, if you like clear, no-nonsense breakdowns like this, hit subscribe right now so you don't miss the next video. First, what is going on? Todd Combs has spent more than a decade inside Berkshire helping Buffett pick stocks and, more recently, running Geico. Now he's leaving to lead a new strategic investment group inside JPMorgan. His job: invest billions of dollars in companies tied to national security and economic resilience, things like defense, energy, critical technology, and healthcare, and he'll report directly to CEO Jamie Dimon. At Berkshire, his exit triggers a chain reaction. Geico gets a new CEO, Nancy Pierce. Berkshire's longtime CFO is set to retire in a couple of years, with a successor already named. And by the end of next year, Warren Buffett himself is expected to step down, with Greg Abel taking over as CEO. Second, why does this matter for Berkshire? Combs was one of the two main stock pickers many people assumed would run Berkshire's huge equity portfolio after Buffett. His departure raises a simple question: who controls the investment strategy in the post-Buffett era? Greg Abel will run the overall company, but he's not a traditional investor. Ted Weschler may get a bigger role, or Berkshire may lean even more on its operating businesses, railroads, energy, insurance, and a bit less on the image of a single superstar stock picker. Symbolically, one of Buffett's chosen insiders leaving right before the handover makes investors pay attention. Third, what does JPMorgan gain? JPMorgan is basically building a mini Berkshire-style investment arm inside the bank. Combs already knows the firm from serving on its board. He brings Buffett's long-term, value-driven mindset to a bank that wants to bet on America's strategic industries for the next decade. It's also a signal. Wall Street is willing to pay up to get people trained in the Berkshire way of thinking. So let's break it down one last time. Berkshire is entering a transition. Buffett out, Abel in, senior executives moving on, and now Todd Combs leaving for a powerful role at JPMorgan. That puts more pressure on Berkshire to prove it can succeed without the old guard, and it gives JPMorgan a high-profile investor to lead its big new bet on national security-focused companies. The bigger question is whether this is just one career move or a sign that the Buffett model is slowly being copied and absorbed by big banks and private capital. This is Imran Breaks It Down. If you found this helpful, please subscribe, like the video, and drop your thoughts in the comments. Do you think Berkshire is stronger or weaker after this? And share this with a friend who follows Buffett or the big banks. If you're already subscribed, thank you. We'll keep breaking it down together.